Hey, everybody, and welcome to the Blind Ambition with Jack Kelly. It's Rick from Blind, and we have a special episode today. We have Telstra Ventures, which is the corporate venture capital arm of Australia's largest telecommunications company by market share, Telstra. We have Saad Siddiqui. He's a general partner at Telstra Ventures. He focuses on enterprise technology investments, especially next generation enterprise infrastructure and applications. He was previously a member of Cisco's venture investing and acquisitions team, covering cloud, big data, and virtualization, and has also worked in mergers and acquisitions at RBC Capital Markets. Next, we have Mark Sherman, who's the managing director of Telstra Ventures. He got his start investing in college when he was assembling barges and working at an investment firm concurrently. He's responsible for some of the firm's most well-known investments, including Box, Cumulus, DocuSign, Skills, and Springboard. No pressure, guys, but a lot of employees at your investments, your portfolio companies are listening. And I think this might be the kind of first time they're hearing about some of their investors, right? The strategic side, this corporate VC side. Uh, I was wondering if you could kind of dust off your crystal balls and kind of walk us through your investment thesis and what you guys see.
Sure, maybe I'll jump in and then Saad, you can climb in as well. I think the thing that's different about us is we're building the best firm around data science and revenue generation for venture capital. And so the two things that we're really trying to differentiate on is using data science as a tool to try to discover and analyze interesting investments. And then secondly, helping those companies get usually from $1 to $10 million to $100 million in revenue and beyond. And so that's basically, where we're positioned in the marketplace. And it's worked out really well in that we have sourced tons of companies on the data science side, and we've generated almost $500 million of revenue for our portfolio by helping them either sell to Telstra, which is the large Australian mobile operator, or through Telstra customers, or to direct relationships that we have in the industry. And one of the things that we're pretty proud of is we're assembling an NPS study about ourselves, and basically we're coming in the 70s right now. It's not done, but it's headed in the 70s in terms of our most of our analysis thus far. And so, that's basically where we're positioned in the marketplace. And then maybe Saad, you may want to talk about some of your specific investment theses in terms of where you're interested in investing today.
Yeah, I guess a couple of things that I've been sort of thinking about over the last few years is the workplace is changing pretty dramatically, right? So the future of work has been very dynamic. We've gone from a relatively static place in the HR world to a very dynamic place. So we've gone through everything from COVID to where everyone now ended up working remotely or in hybrid fashion to an incredible boom time where scale was everything, especially in the tech side, to now a great recession, right? So profitability is the flavor of the month right now, and people are optimizing for profitability over growth at all cost, which was what we've sort of experienced for the last decade. And kind of doing all of these things at the same time is becoming very challenging for a lot of organizations. And I don't know if there's like one silver bullet that we tell either our portfolio companies or different teams to implement. Technology is effectively a tool, and every team needs to sort of figure out what gives them the most flexibility. So for me, where I've been sort of spending a lot of my time is helping different leaders across different organizations figure out what are the tools that they need to get the maximum amount of flexibility so that they can build organizations and processes that can help them cater to their workforces.
That's great. If I could just make a quick tangent, from Mark, I don't know if this is helpful or not. I've been in touch with a lot of folks who are unfortunately downsized from Tableau, from Salesforce, who are very senior level data analytics, data scientists. Would that be helpful for some introductions?
Yeah, totally. I mean, I think in the end, we've got some great portfolio companies that are, still navigating, some of the landscape that's
Just,
coming to
I'm not doing
town.
it as a recruiter. This is more
Yeah,
just,
that just
putting people together. So,
yeah, no, we,
so I'm
we
just
would
throwing it
love
out there.
it. I mean, in the end, we're always looking for great talent. And, I think kind of despite some of the headwinds that, Saad was sort of outlining, a lot of our portfolios are growing and doing quite nicely and are always looking for, interesting, upgrades from a talent perspective.
Now, how does it help with the data? I think you took somebody from LinkedIn a little while back and kind of growing it. And Rick, you can appreciate this. I don't see, let's say, with a lot of tech people often talking about data, but it seems to be a huge area and a big growth area. But for some reason, it doesn't get the same, or maybe I'm wrong about it, but it doesn't seem to get the same recognitions as the software developers, the engineers.
Yeah, I mean, I think in the end, uh, we see it as where the venture industry is going. We'd say, 90% of venture firms really aren't using data science very deeply. Maybe 10% are and sort of experimenting with it. And Jonathan, who leads data science for us, has done a terrific job of bringing data science into our practice. And he started as a hedge fund data scientist, and then he worked at LinkedIn for a couple of years. And at LinkedIn, he was basically working on marketing lead analytics, and essentially that's a pipeline management problem. And is at a very stratospheric level, most venture firms are really trying to solve a pipeline management issue. They're getting lots of leads, and how do they sort of sort through them and prioritize the ones that have the most promise and the most opportunity. And so we thought he would be a great addition to the team. He joined 5.5 years ago, and just day by day, week by week, we have more data and more automation in terms of our business, in terms of how we're executing the investments that we're making.
Yeah.
Guys,
And
for the
just
next step,
that,
would it be not only data, but now with AI, machine learning, does that go hand in hand, or kind of those are different worlds?
yeah, Jack, just to kind of piggyback over what Mark was saying and to expand on your question here, when we sort of think about data science, initially it was like to find helping identify really interesting companies that we should get in front of and that are sort of seeing some level of traction and scale. I think what sort of happened is we've sort of built some really interesting AI models that help us do that. But on top of that, like when we invest in companies, this is a relationship we need to have for more than a year or more than 6 months, right? So we're investors in these companies for the long term. And we think about like what are the value that we are sort of bringing through the data science side as an example. So for example, if a company is having issues around customer retention, like who are the top companies in our portfolio? We've invested in almost 100 companies today. What are they doing, right? So connecting them with folks that know how to solve those issues, identify, and then adding benchmarking, helping identify areas of issues from a company's perspective that they need to sort of be aware of, that like, hey, these are the top 30 metrics that you should be thinking about, because this is going to determine or identify problem areas and determine how successful your next financing round is going to be, or any issues that we sort of see upcoming. So like being the eyes and ears, and because we've looked at now thousands of companies over the last decade, we have a lot of data around what makes a good company great. So helping a lot of our executives and founders that we've invested in, help them understand how to establish a culture of accountability and help them scale from there.
So I love, I want to pull at this thread that you mentioned. I love this discussion of like kind of the expertise that you have on hand, because I think when most people think of venture capital firms, they think of investors that are out schmoozing, trying to meet the next like startup founders and CEOs. And, maybe the like the due diligence or the kind of assessments are on the finance side, right? Like what's your P&L look like? What are your numbers look like? But you're actually going deep into the technology. How are you doing that? Do you have these technologists that are experts on staff? Is it, you know, by kind of the virtue of your own expertise working in industry before coming onto the investment side?
Yeah, it's actually really interesting because like the way uh Mark can tell you, like I'm like the fly on the wall in networking events.
Yeah.
I actually love kind of spending more time one on one with founders and just really sort of helping them think through their strategies. And one of the things that we talked about a bit earlier is our NPS is like now north of 70. And that's because we don't necessarily like we talk about our successes, but we let our founders talk about our successes more than what we like to say. So this sort of comes from the team's experience, right? So like a lot of our teams have a lot of team members have worked in industry and bring a wealth of knowledge from that perspective. And then also we are like always kind of putting ourselves in founders' shoes and trying to figure out what are the things that would be helpful to them, either from a data science side, either from a revenue bearing relationship side. Are there customers that we can get in, help our portfolio companies get in front of, through which we've actually generated, as Mark mentioned, almost $500 million in revenue. So yeah, that's sort of the expertise we'd like to sort of bring to our portfolio companies.
No, I really appreciate that focus because there's just saying that like all dollars are green, right? And so when you're like looking, and if you're a hot company or you're like a big time CEO, CFO, founder, maybe you're getting a lot of introductions to different venture capital firms, right? And at the end of the day, when it's an investment, I mean, it's the same dollar amount, right? But I love this like focus on like the person, the operator, that you guys are going kind of above and beyond and saying, hey, how do we actually like connect you and grow your business, right? Like we are investors, but actually like partners as well, right? We're going to actually embed into your operations and really understand it and figure out what's the next level. Is that kind of like a correct kind of summary there?
Yeah, totally. And kind of building on what you're saying, Rick, you know, we've made 90 investments. We've generated revenue for 45 of those.
Wow.
And the way we do that is we have 4 people on our revenue acceleration team, and all they do is spend their time trying to think about what relationships we have, what relationships can we bring to bear so that we can help, introduce new prospects or existing customers to some of our newer portfolio companies. And it's worked out really well. And most of the companies that we work with are sort of in the $1 to $10 million range when they're starting. And so if we can bring, incremental wisps of revenue, it really, makes a difference. And I would say 99% of venture firms, can't really generate revenue in a predictable way like we do. And so it's really a nice, differentiation in terms of how we can kind of demonstrate our hard dollar value to our entrepreneurs.
I'm glad you brought that up, Mark, because it's to a person who's outside of this ecosystem. It's always curious where you'll have these, really sexy startups, founded by these marquee, VC funds, and they just burn through money and burn through money and burn through money, and definitely not profitable, not much revenue, but yet they're lauded in the press as, oh my gosh, this is fantastic. Whereas it sounds like you guys are saying, wait, no, we want to build a business that's making money and being profitable. Like how does it play for these other ones who just keep burning through cash and just keep going?
Well, Saad hinted at it before, but there's been a big shift in venture land from 2021 to 2022. Venture in 2021 was growth at all costs. So to your point, Jack, spending a lot of money trying to get revenue to grow as quickly as possible. And then when the equity market started to sell down in 2022 and NASDAQ was down 30% and interest rates started to spike up, there is a much more emphasis on profitability. And so I think what we've been seeing in the last year is a lot of growing pains with a lot of the companies as they've been adapting from a growth at all costs mindset to one that's more around capital efficiency. So I think, we've been encouraging our teams to be thoughtful about how they grow and to be very efficient about how they grow. But it's definitely been very much in the market in the last year. That transition has really been playing out. And I think you'll see, more of the companies in 2023 and beyond be leaner, meaner, and actually in a much better position to grow downstream.
What happens next, do you think? So that, as you pointed out, I think there's going to be about what, 5% interest rates instead of 0. I'm sorry. I think someone's just opened the door in your background over there. So I was wondering, because I had my dog here and I was hoping that my dog was going to start barking in the middle of everything. So this is, we can always edit it out. It's okay. So yeah. So what happens when you have inflation, when you have high interest rates, and you have companies that really weren't tied into, hey, we have to be profitable, we have to kind of make money, we have to be thoughtful. Can they even change, Saad? Do you think, do they have the chops to change gears, or did they get so complacent where you have 10, 15 years of free money coming in and now all of a sudden it doesn't work like that?
Yeah, I think just on a mechanical perspective, right? Like as interest rates rise, the return that a startup needs to generate has to be higher, right? So in the past, if a venture capital fund is returning 20%, great, because on the debt side you're getting 1% or something like that. And as interest rates rise, the cost of capital increases, and as cost of capital increases, people, even so, if you think about it from a mechanical perspective, startups are selling to companies. Those companies now have to service the debt that they have. And as those costs increase, the budgets start shrinking, which means growth starts shrinking for startups. Their end customers aren't going to be as experimental as they might have been in the past. They need tools that work. They're looking to potentially even consolidate tooling. They're looking at doing a lot of different things around cost management, cost reduction, and things of that nature. In the end, technology is a deflationary tool, right? So technology reduces costs. Like through automation, the goal is that hey, you have 20 people that are putting in this data in this database. Can we auto tag it and have one person do the job of 10 people? You may end up spending the same as one person's salary, but it's paying for 2 people instead of 1. And if you look at the arc of technology and innovation, it ends up being a force of deflation. But at the same time, buyers are becoming they're becoming more scrupulous around it. If they're not going to just take a marketing person's say of this, they're going to see if it is actually having an impact on the cost side, and if it is, they'll keep it. But if not, they're becoming more strict and stringent around on things that are not delivering solid ROI.
So it also sounds like it could end up being a positive, that it makes people, say, hey, wait, we got to really buckle down, tighten our belts, be really, we can't do what we did before, which would end up, I guess, coming out of the ash. Not, I want to say ashes. I don't want to be dramatic about it, but really turning it around and actually looking back, saying, hey, wait, maybe this is a good thing. It made people really focus on the business and not all the hype.
Yeah, I think in these times is sort of when you kind of separate out the great companies from the companies that will sort of fall by the wayside. Companies that can survive this downturns have a sense of a purpose, a vision, and are actually delivering true ROI to their customers. And then at the end of the day, business is a function of are you giving the world what you want, what they want? And if startups are doing that and helping their customers be successful, like they'll be that's sort of who we want to back. Iconic companies that last decades.
Now, I don't know if this is not your business model, but would you ever consider looking at some of these other companies that maybe blew through their funding, maybe they were burning too much cash, and say, wait a minute, they have some really good people, some really good technology. Maybe we'll kind of try to acquire them. Is that going to be something, when we talk about a crystal ball, is that one of the things that maybe would be in the crystal ball? We'll start seeing either acquisitions, from other places like yourself or private equity swooping in to kind of find, the gems, but they just don't have the money and they need the money in the PE shops. And maybe you guys have the money to do it. Is that going to be maybe a new trend coming up?
Yeah, totally. Like we've actually, we don't acquire companies, right? So, but our portfolio companies are becoming very active. One of the companies that Jack, about, a company called Certain, which is in the background check space, they've actually bought 2 companies in the last 12 months. And they're definitely you're seeing better value. And at the end of the day, we need to sort of have the end customer in mind for all of our portfolio companies. And if we sort of find our portfolio companies find companies that can extend or bring in the roadmap, things that are 2-3 years out, and accelerates their roadmap or helps them get into different geographies, or just helping them build scale so that they can serve their customers in a better way. Like all our portfolio companies are sort of spending some time and trying to figure out how they can sort of do that through acquisition, especially if they have cash on the balance sheet.
In particular, a better background check. Oh my gosh, that helps out. The background checks, I got to tell you firsthand, and I deal primarily really top investment banks and hedge funds and private equity. Oh my gosh, they're horrible. It takes forever. You can't, you're waiting for, imagine that you're getting this job. You're so excited about getting this job. A week goes by, 2 weeks by, 3 weeks go by. Where is it? Oh, wait, you have to get this document. Oh, the job you had 20 years ago, they didn't get back to you yet. Well, I don't know who that manager is anymore. So yeah, so that's a really cool company. Are there some other interesting, cool, sexy companies that you'd be, happy to share with the audience that you feel like, wow, this is pretty neat. This is pretty, good game changer here.
Yeah, I think the way I sort of thought about future of work is you've got identification of really interesting talent to onboarding and training that talent, and then providing them with the tooling. The other thing that's sort of coming up is cybersecurity, right? As we talked about in future of work, as people become more distributed, cybersecurity is becoming much more top of mind. It's always been top of mind. It's just attacks are in the past, you would attack an office that has centralized systems. Now, you're attacking someone who's working off a hotspot somewhere in a coffee shop. Much easier to do. So how do you sort of manage a lot of that sort of stuff, right? So I guess on the identification side, Certain is a company that we back on the background check side. On the ongoing training side, we've invested in companies like Springboard, which is helping educate and train employees. Stackit, which
that is so important. That's can I tell you when I'm writing, I write for Forbes, and I can't tell you how many companies are trying to figure out ways to upskill and train and retool people. It's so important. So I'm sorry, go ahead, but I'm so glad you're talking about this.
Exactly. And actually Mark had a prediction for 2023. Mark, do you want to talk about that around training?
Yeah, so and it relates to Springboard, because I think in the end what we're going to see is more companies are going to invest in job makers as opposed to job takers, meaning that they're going to spend more money on this upskilling concept, so that they actually, grow the tree that they have, as opposed to necessarily trying to go out and find the incremental tree. And one of the reasons why we like Springboard in particular is because they help people with upskilling in cyber, in data science, in UX, UI design, and software engineering, some of the more popular disciplines that you need to grow out teams with. But they've really invested in an intense network of mentors, and so they do all the online content, but then they have weekly catch-ups with people so that they can mentor them and help them grow their product portfolios to demonstrate. So that's sort of another area in the future ways of work that we see as being very interesting in a company that we're quite fond of.
Yeah, Rick and I had a number of cybersecurity companies, and they all to a person say, hey, we can't even get enough people. The demand is so enormous, but we have a hard time finding folks. And it's such a hot area. Like, for instance, we just had Arctic Wolf the other day and some others. Now, if you don't mind, can you indulge me in perhaps a little bit of a conspiracy theory thing that I'm thinking of here?
Sure.
Right, don't mock me. So I this is not fleshed out. All right. So here in the US, all the planes stopped. What was it, last week? All the planes were
Yeah,
grounded. I thought it was
exactly.
just the US, but then you find out Canada, the Philippines, and others, right? And then you start thinking, wait a minute, this can't just be a computer glitch. There has to be something going on there. And then I start thinking, because we spoke to a whole lot of these cybersecurity people, so we got a little educated, and then wondered, this sounds like maybe more of kind of a hacking thing, and maybe they're holding them up for ransom, because the Bitcoin mysteriously all of a sudden popped up from like 16,000, 17,000, like 20,000. So did they try to keep it quiet? Did the government try to keep it quiet and pay off, just so it didn't freak out Americans like, oh my gosh, I don't want to go on a plane anymore? I don't want to put you in an awkward spot for commenting on that, but is that crazy, or is that like, these things happen for cybersecurity, that this is the world we're in now?
Yeah, I think, Jack, to be honest, I don't know if I can comment on
I
that.
don't want to put you on the spot with that. This is theoretically, hypothetically, not even this, just generally. Is this what, when we talk about cybersecurity, these things we have to worry about?
Exactly. I think like an example which was very well documented around this is like an area called ransomware, right? So you might
The Colonial Pipeline,
but like that was the one, and then the Georgia parking lots, right? Like you had all these parking lots that wouldn't open, and
I didn't hear that.
yeah, I think this is a couple years ago. It might have been 2020, 2021, where like a hacker basically said that like, hey, like I've got control of all the parking lots in Georgia, and he wouldn't let, or he or she wouldn't let them open those parking lots unless they paid him in Bitcoin. So it is really interesting that some of these are like in the news that people know about, and there are definitely a few that like people don't know about, right? So it sort of shows that like some of these things like literally has a massive impact on businesses, and cyber attacks, especially in recessionary times like the one we're in, actually increase. So I think which is challenging because budgets are constrained. So finding companies that provide efficient and actually like better visibility, better insight, and better ability to control, manage these attacks is very critical.
Yeah, and kind of building on what Saad's saying, I think there's lots of ways to kind of help solve this, and we definitely invest in a bunch of cyber tools. But there's also a company that we've invested in called Corvus, which is in the cyber insurance area, and it helps small to medium-sized businesses insure themselves against the risk of a parking lot incident or a Colonial Pipeline incident, or an airline incident that you're throwing out there as possible ideas. And we think that it's going to be a tremendously large enterprise, primarily because cyber risk is only growing, and people need to manage it just like they manage life insurance and auto insurance and all the other types of insurance that they have in their lives.
So you mentioned this kind of like recessionary time period that we might be entering, and there might be an increase in mergers and acquisitions in the space. I was hoping, can you break it down tactically? if you're a professional, a technologist in the space right now, you're kind of thinking about the next move that you want to make for your next career hop. Um, should you basically go read Bloomberg and the Journal and find the companies that are doing these acquisitions? Is that a signal of strength, or do you have another kind of like trick that you might be able to share with our audience there?
Well, I think that, you know, the way I would look at it is if I'm at a large company, potentially a large public company, and I'm having a lot of administrative in my life, wouldn't it be a nice time to look at something else? And as a
Yeah.
friend of mine who shall remain nameless, who's a VP of XYZ at a large company, said, I'm just tired of being VP of spreadsheets and, working through kind of all the expense management that I think that I need to manage as a publicly traded company, monthly and quarterly budgets, and being involved with, a purpose, people, and a positive impact. So those three P's at an emerging company is much more, enchanting, where my problem is I have a lot less resources and I need to solve much greater customer problems and figure out those types of problems as opposed to being, VP of spreadsheets. So in some, kind of really focus on kind of what is the purpose really aligned with your personal values? Do the people you really get excited about? And then is there a positive impact that this company is making that you can, really get behind? That's kind of the framework that I would use if I was a VP of XYZ at a large public company.
And to kind of add to what Mark is saying, like, to me, one of the most important things that in my career has been working with people that I really admire. And just like, if you can learn from your colleagues and you don't despise them, nothing better, right? Like, there's no amount of money that can sort of overcome that. So for the folks that are sort of thinking long term, try to find the best teams they can be a part of. Focus on that. Go to a place where you believe in the mission, that is making an impact in the world, that isn't like, hey, I can make a quick buck here, this company could get acquired and I can make a ton of money, or sort of like, to me, that's sort of short-term thinking. But like, just try to find the best teams, because at the end of the day, that's sort of something that can last forever. And we've sort of seen people, like teams, move from one place to another, and it ends up, you may see resume job hopping, but at the same time, because they're part of this corpus of folks that sort of move around, it can be extremely beneficial for someone's career.
Yeah, and building on what Saad's saying, our data science guys have just been playing around with some people scoring technology. And one of the larger ways of scoring people is, have they been at a tech platform in the glory years for a long period of time? And those people tend to have a higher probability of being founders that actually generate nice multiple returns over time, if they've been in a company for a long period of time and really kind of devoted themselves to a specific project.
Can we dive into this term that you mentioned, this people
I
scoring
was just
concept?
gonna ask that, Kieran. Yeah.
Is that kind of a framework that is unique to Telstra Ventures, where perhaps it's kind of a criteria that you use to kind of identify, noteworthy companies or notable founders?
Well, just to be super open, it's kind of one of those things that I mentioned, and I was a little bit like, maybe I should pull those words back, because it's very much
Right. It sounds like social scoring, like the
it's
Chinese
very
kind
much in
of.
the experimentation stage, and
Okay.
and we're hoping that it's, peanut butter on one side and chocolate on the other, and we mix them together and you have Reese's, as opposed to something that's a little bit less tasty. But we've been experimenting a lot with people scoring as another way of looking at how we evaluate young companies that come into our firm, either at the top of the funnel, so at the very beginning, or deeper into the diligence that we do with the companies. And so it's something that our data science guys have been playing with in terms of how do they actually score founders in terms of high score or medium score or low score. And they've been playing with a bunch of different variables, and that was one of the variables that seemed to consistently drive the valuation of startups higher, was founders that had been at large tech platforms and built a product for a large period of time.
Yeah, I think in another way, like we're looking at attributes. So like when you sort of think about venture capitalists in the past, right? Like you would sort of think about like, oh my gosh, I heard this idea, the founder was enchanting and I had to give him money. And that's where, in the absence of data in the past, like you didn't have a lot of data, right? In the 70s and 80s and 90s. Now you have a lot of like actual data around people's job histories. You have data around the product that they may have built on an MVP perspective, what traction it has and all that other stuff. In our mind, can we bring a little bit of science to that selection rather than having our emotional heart sort of lead the investment decision? I think the human side is obviously still there. We cannot divorce the science side from the human judgment side, but can we augment our decision making with data and have actual conversations around, like, if the data doesn't fit what the founder is saying, like we need to sort of prove to the team why an investment is still worth making. So I think but at the same time, like one thing this tool can help us do is identify common traits founders have that can sort of show resilience, that can show good judgment, can sort of show like that they know how to build more than a product, a company.
The more you talk about it, it's a really interesting concept. When you first mentioned it, it feels like more kind of big brother watching over you. But as you walk, talking about it, the applications could go to just, individuals who are looking for a job. So, because the way you're describing, as I understand it, what was it? Andrew Newman? I forgot his name already. Who comes in, charismatic like crazy, barefoot and like, hey, here's tons of money. Go build WeWork, right? But maybe if you had more data to say, well, maybe like, all right, we shouldn't throw such money, or how much money we should give. But so if you have that scoring, let's just take somebody who's looking for a job. They're looking to go to Morgan Stanley for something. Maybe you have like, where did they go to school? What kind of grades did they have? What kind of extracurricular activities they have? And so on, so on, so on. So that when you go for an interview, a lot of it is when you go in interview, are you a good schmoozer? Are you charismatic? Are you likable? And you may get the job, but you really don't have the same skills as somebody else, but they're not as schmoozy. But if you have that kind of scoring, you can make a more intelligent decision based on the data and based on, your experiences of what works and what doesn't work.
Yeah.
So is that something that you guys are thinking of maybe finding some business to build that out? Because that's really interesting.
Yeah, we're building it out every day, and maybe to put some more arms and legs around it, we're looking at startups and can they get to a $500 million valuation? Can they raise a Series B? Can they raise $100 million? Would be sort of one angles of success. And then if we look at were they an engineer from a large tech platform? And if they worked at a large tech platform for 1 to 5 years, they're 50% more likely to get to that result. If they worked at a large tech platform for 6 to 10 years, they're 100% more likely to get to that result. And if they worked at 11 years plus, they're 150%.
Rick, you love this because this is right for the people on Blind. These are all, you're just describing all these software engineers that are looking, how do I do this? How do I make this happen? And so you're giving the blueprint. for and what would succeed, right?
Yeah.
Yeah, and the numbers are rough. I mean, it's directionally accurate, but it's in that
Right.
Yeah.
ballpark of 1 to 5, 50%, 6 to 10, 100%, 11 plus, 150%.
And you've seen that happen again. So you've been through this so many times that you see this works, right? That this metric.
Yeah. And I think, Jack, going back to something that you were asking about around helping people find jobs, like we do that all the time with our portfolio companies. We identify, like, if company X is looking for a head of customer success, like, and they're looking for someone with this sort of experience, that sort of experience, our data science team actually spends a lot of time identifying that talent and surfacing that for our portfolio companies.
And kind of we've talked a lot about data science that relates to our business, but coming back to Rick's question in terms of what you'd be looking for, is it M&A, or how do you cut this? And I kind of went with the 3 Ps. The other angle I would say is just seeing how much AI is just touching all of our businesses. And I would just try to say, what do I know? How can I mix that with some AI capabilities to turn it into something, really powerful? And, we've seen it in all of our portfolio companies in varying ways, from customer acquisition, so top of funnel, to actually defining their service delivery. So around, cybersecurity, we've talked about it a bit. One company maybe to highlight would be a company called Airspace, which is in the next flight out logistics area. And so if you have a kidney or a liver that needs to get from New York to Los Angeles, they basically will find you people that will drive that liver from Mount Sinai in New York to a teaching hospital in LA. They'll find the next flight at Newark LaGuardia or JFK, and then they'll find somebody to pick it up at the other end very inexpensively. And the way they do that is with a ton of data science around logistics and logistical optimization. And it's done incredibly well here in the US. They're expanding into Europe, and one of the plays that they're doing in Europe is all around low carbon footprint, because they're just taking United flights and Delta flights and Southwest flights, and the carbon's being spent regardless of whether their package is on board versus not. They're actually a nice environmental play in addition to all the data science. But coming back to Rick's question, I would definitely ask the question of, is there an AI angle to the company that you're thinking about joining? Do you have some capabilities that can add to that story?
Yeah. And just to add to Mark's comment, I think I've been playing around with ChatGPT as an example. The generative AI side is a step functional change that I think every employee needs to get in front of. Like, now I can literally, my 10-year-old cousin can ask ChatGPT to write him a line of code that makes him a video game, right? It can do that. You don't need a programmer anymore. Like, what happens when you can actually have programming, have art, have movie scripts automatically be generated that actually sound really good? So, like, going back to the example of what Mark was saying around how AI is going to touch everything, it's sort of gone from automation, which is really critical, to like proliferation of this AI. And automation was done by the tech companies. Now it's the proliferation where everyone can benefit from artificial intelligence. And you can actually now, like, we've gone from, like, if you kind of think about the market cap per employee that has shifted over the last, like, 100 years, right? Like, the more employees that a company had, it sort of exemplified how big the market cap of that company was going to be, or enterprise value was going to be. It's shifted dramatically. Like, all these tech companies have tens of thousands of people. not hundreds of thousands of people as they did in the past.
Right.
And over time, I wonder if with some of these generative AI tools, can you bring that employee count down? Can you have a company that's 100 people and have $100 billion company? Like, what are the tools that really need to be set up for you to kind of build a company? The bar is coming down pretty quickly.
I mean, it's an interesting future, but some, people might be cynical and think, oh, you're almost describing a dystopia, right? Where there might be hundreds, thousands of people out of jobs. I mean, is that
Yeah,
necessarily true, or does it just unlock us to do a different kind of work or more
yeah,
higher level thinking?
I think it's assuming like only 10 people can do that job. What if you gave that power to a 15-year-old in sub-Saharan Africa, right? Like the
Right.
the
Wow.
powers, like there shouldn't be a cap on the number of companies that are out there and how someone can make a living. Now you're giving these tools to the entire world, not just a select few in Silicon Valley.
And I think we certainly saw that in the last year or 2 years, right? With um, just the pandemic, HR, the workplace has not really changed, right? And then in the last 2 years, we've seen almost a decade's worth of change in just that short amount of time. Do you have any kind of other predictions or reactions to this future of work that we're basically on the bleeding edge of?
I think one thing that I'll throw in there, we unfortunately haven't had a chance to touch on. I think the benefit side is also changing pretty dramatically. I think one of the companies that we invested in is a company called Lively, which is around um, HSA and healthcare savings accounts. And what we're sort of seeing is as costs rise for employers, they're looking to find better, cheaper options. And on the other hand, employees are also, because they're switching jobs more than they ever have, and even starting companies, they want to start finding ways to save for their healthcare expenses here in the US that sort of caters to like the way they work and are more flexible. So we're seeing a massive boom in the HSA market, and Lively is a bet that we made and has been a beneficiary of that tailwind.
And building on what Saad's saying, another angle I think we see is just companies doing more assessments before they actually um, hire people. And, it's sort of a little bit of dating before you actually get married, would probably be a very rough analogy. But we've got a portfolio company called Forage, which basically helps some of the best companies in the entire world do assessments for interns, analysts, early people coming into their careers. And my daughter is a junior at USC and was complaining to me that some of her friends were doing a bunch of these assessments and they found it very stressful. And I said, you may not want to share this with them, but it's a company that we've backed and we think it's actually a great idea. And it may cause a little anxiety, at least up front. But ultimately, it's going to be better for the individual, but then also better for the company because Forge has got some terrific data about how people that do well in their assessments on the way in tend to stick and be longer term employees and then also get promoted faster in terms of their career tracks. And so we're just big fans of assessments and big fans of Forge as a tool to try to navigate that ecosystem.
Just when you say for FORGE, for
Forage.
okay.
Yeah, forage, like as in the forest, kind of foraging for mushrooms or whatever.
And what we could do
Mark,
too is, after we edit the the podcast and everything, we could put kind of notes in terms of some of the different companies you're mentioning because they're really interesting. I think people will be really excited to learn more about these organizations.
Totally, we love it.
awesome. No, I really appreciate your insights, Mark, Saad. It seems like you guys are really at the forefront of what's going on in terms of not just the future of work, but just how data is becoming increasingly prevalent in our lives. And so I speak for kind of all of the technologists on the blind community that like this was an eye opener. So thanks for coming on the show.
Yeah. I think also we can add this before we leave. We need that list of what to do, because I think the people on blind would love to have that checklist of, okay, if I want to be a startup founder, here's what I have to do and make sure I'm
Yeah,
doing it, right? That's like so on point for your audience, Rick, right?
that's exactly right.
Excellent.
Well, it's been great talking to you guys. Really appreciate it. And if there's anything else that we can do, just let us know.
Great. Thank you so much, gentlemen. This is great.
Thanks so much.
Thanks.